In 2025, the biggest companies on Earth spent more money building artificial intelligence than it cost to put a man on the moon, adjusted for inflation, several times over. They are spending hundreds of billions of dollars a year on it. And here's the uncomfortable question almost nobody in charge wants to answer out loud. What if it doesn't pay off? This is the story of the AI bubble, explained as simply as possible. Firstly, the basics. What even is a bubble? Picture a single trading card, a normal one worth maybe $1. Then, a rumor spreads that this card is going to be worth a fortune. So people start buying it, not because they want the card, but because they think someone else will pay more for it tomorrow. The price climbs. $10, $100, $1,000. Everyone's getting rich on paper, so more people pile in, terrified of missing out. And the whole time, one question is quietly ignored. Is this card actually worth $1,000? A bubble is what happens when the price of something floats away from its real value, held up by nothing but the belief that it will keep going up. Bubbles don't pop because the thing was fake. They pop because the price ran ahead of reality, and reality always catches up. That's the trading card. Now let's talk about the most expensive trading card in human history, artificial intelligence. Let's talk about where it all started. It started in November 2022, when a company called OpenAI released ChatGPT. It could write, answer questions, and hold a conversation. And people lost their minds. It reached 100 million users in about 2 months. For context, Instagram took 2.5 years to reach that milestone. And Facebook? That took 4.5 years. ChatGPT became the fastest growing app in history at launch. Suddenly, every company on Earth was terrified of being left behind. And a gold rush began. Now here's the oldest rule of any gold rush. The people who reliably get rich aren't the ones digging for gold. They're the ones selling the shovels. In the AI gold rush, one company sells almost all the shovels. It's called Nvidia. Nvidia makes the specialized computer chips that AI runs on. If you want to build AI, you need their chips. Almost everyone does. So as the whole world rushed in to dig, they all lined up to buy Nvidia's shovels. And Nvidia became the most valuable company in the history of the world, worth more than $4 trillion. To put that in perspective, a few years earlier, it was worth around $300 billion. It grew more than tenfold. One company, selling shovels. The numbers that don't make sense yet. Now here's where it gets strange, because it's not just Nvidia. The biggest tech companies, Microsoft, Google, Amazon, Meta, decided they could not afford to lose this race. So they started building enormous data centers, giant warehouses packed with hundreds of thousands of Nvidia chips, guzzling as much electricity as small cities. And the amount they're spending is genuinely difficult to comprehend. Together, these companies are pouring somewhere in the region of $300 billion a year into AI infrastructure, and climbing. That is more than the entire annual budget of most countries on Earth, spent every year on computer warehouses. Meanwhile, OpenAI, the company that started it all, was valued at around $500 billion. There's just one detail. As of 2025, OpenAI wasn't making a profit. It was losing billions of dollars a year. So step back and look at the picture. Hundreds of billions being spent, trillion-dollar valuations, companies worth fortunes while losing money. All of it resting on a single belief, that AI will eventually make back every dollar, and far, far more. And maybe it will. But maybe is an expensive word at this scale. The warning signs. So, is it a bubble? Let's look at the warning signs the optimists would rather you skipped. Warning sign number 1. The money is moving in circles. Watch this carefully because it's the strangest part. Nvidia announced it would invest up to $100 billion in OpenAI. And what does OpenAI do with money? It buys computer chips from Nvidia. Think about what that means. The shovel seller is handing money to the gold digger so the gold digger can buy more shovels. It makes Nvidia's sales look enormous. But some of that demand is, in a sense, Nvidia paying itself. These circular deals, companies investing in their own customers, are now woven all through the industry. And when money starts going in circles to make demand look bigger than it really is, history says, pay attention. Warning sign number 2. Nobody's really making money from it yet. Not the chip buyers anyway. In 2025, researchers at MIT studied businesses using generative AI. They found that around 95% of company AI projects were producing no measurable return at all. 95%, showing nothing on the bottom line. The technology is real and impressive, but impressive and profitable are not the same word, and the gap between them is where bubbles live. Warning sign number 3. The chips don't last. Those Nvidia chips that everyone's spending hundreds of billions on, they wear out and go out of date in just a few years. So this isn't like building a railway that lasts a century. It's like spending your fortune on a warehouse of computers that will be obsolete before they've paid for themselves. The spending never stops. It just has to keep going, forever, faster. And warning sign number 4. The smart money is getting nervous. Michael Burry, the investor who famously predicted and bet against the 2008 housing crash, disclosed in 2025 that he was betting against AI stocks, including Nvidia. Even Sam Altman, the head of OpenAI himself, admitted that investors were, in his words, overexcited, and used the word bubble out loud. When the man building the thing tells you people are too excited about it, that is not nothing. And central banks, including the Bank of England, openly warned of the risk of a sharp market correction tied to AI valuations. But what if it's real? Now, to be fair, because this matters, there is a powerful argument on the other side. And it's this: sometimes the bubble and the revolution are the same thing. Rewind to the year 2000, the dot-com bubble. Investors threw money at any company with .com in its name. Most of them had no profits and no plan. Then it popped. The Nasdaq stock index fell about 78%. Trillions of dollars vanished. Thousands of companies died. And here's the twist everyone forgets. The internet was still the future. The bubble was real and the technology was real. The internet did change everything. It just didn't happen on the timeline the stock prices had promised. Amazon survived that crash and became one of the most valuable companies on Earth. Pets.com did not. So the honest answer about AI is uncomfortable for everyone. AI is probably both. A genuinely transformative technology and a massive financial bubble inflating on top of it. The technology can be real while the prices are insane. Those two things have happened together before. What happens when it pops? So what happens if the bubble does deflate? Here's the part that should make you pay attention, even if you've never bought a single share. A handful of AI-linked companies now make up a staggering share of the entire US stock market, which means they're not just in some investor's portfolio. They're in your pension, your retirement fund, the savings of hundreds of millions of ordinary people who never placed a bet on AI in their lives. The market has quietly concentrated itself onto a few enormous bets. And when a few giants hold up the whole sky, you'd better hope their legs don't buckle. If the prices snap back to reality, it won't only be billionaires who feel it. It'll be everyone with money in the market, most of whom were never asked. That's the quiet truth of every bubble. The people who inflate it are rarely the ones standing underneath when it falls. So let's bring it back to that $1 trading card. Right now, the world has decided that card is worth trillions. Maybe it really is. Maybe AI rebuilds the entire economy and these prices look cheap in 20 years. Or maybe the price ran miles ahead of reality, and reality is taking its time, the way it always does, before it catches up. Nobody actually knows. Not the investors, not the CEOs, not the central banks. They're all just buying the card, hoping someone else pays more tomorrow. And that, explained as simply as it can be, is the AI bubble. A real revolution, an enormous gamble, and a question hanging over all of it. Not whether the technology works, but whether anyone can ever make back what they paid to build it. The machines are extraordinary. The maths is terrifying. If this made the picture a little clearer, subscribe and tell me in the comments, do you think it's a bubble or the future? Maybe it's both.